All right, so joining us now to talk more about what is going on with the market is financial analyst James McBride. James, thanks for being here today. We saw one of the worst days in terms of losses in the history of the market. What exactly happened here today in relation to the U.S.-China trade truce? Did investors kind of lose faith in the possibility of an actual deal being worked out?
Well, that's exactly right, and they showed their displeasure in a pretty massive way where they came back into the market and they were selling off, particularly in the international market. So that was a big part of what happened today. The other thing is there was a very important development in the bond market where there was called an inversion of the yield curve. And what that means is that a shorter term rate, in this case the 3-year Treasury, had a higher rate than the 5-year. That's usually a bad sign because it's showing a lot of non-confidence by the bond market in the longer-term prospects for the economy.
All right, yeah, I mean, there's a lot of talk today about Treasury bonds and this yield curve inversion. Can you help us understand exactly what that means? You alluded to it a little bit. But help us understand what it means and why it's so concerning.
Sure, it's a great question. So what we think about is if we invest our money for a longer period of time, that the return we're going to get is going to be higher the longer we're holding it. And that's what's called the yield curve. It's just a measure of what the yield is for time or maturity. And we like to think that it rises slowly and goes up higher because you want to be rewarded for having your money invested for a longer period of time. But when the curve inverts, that means that the bond market is huge. It's saying that they don't really have that much confidence in the long-term rates. And there's a lot of reasons, I suppose, why the bond market feels that way, but it's usually a pretty scary precursor for the stock market because we saw the yield curve invert before the Great Recession.
In 2006
exactly.
or so? Right, okay.
And we saw it invert before the dot-com.
And I was going to say, and every major recession in this country has been preceded by a yield curve inversion.
That's exactly right.
Okay, so this is quite concerning.
Yeah, so that's more of the longer term, but what the president did today by giving mixed messages on is there a deal with China or not on these tariffs. And just last week, Alan Greenspan, the former chairman of the Fed, came out and said, look, tariffs are, quote, insane, and they're nothing but, quote, a tax on our economic system.
Right. So there's all this ambiguity back to the U.S.-China trade truce. Supposedly a 90-day moratorium on tariffs is in place, but then, as you said, you have President Trump taking to Twitter and referring to himself as a tariff man. And since we have nothing put in writing in terms of this trade deal here, you have ambiguity and uncertainty, and that's not what investors like.
And you also have an economic policy that's based on almost an eye for an eye, and the result of that is going to be everybody's going to be blind.
Okay, that's a big concern. Quickly here, a lot of the big tech companies, Facebook, Amazon, Apple, among others, they saw huge losses today. I always ask you about the tech sector. I mean, do you have any broader concerns there?
That's a little bit of hype in that because if you look at how Apple and Amazon and Google have done so far this year, believe it or not, they're all positive. The NASDAQ itself is positive for the year, better than the S&P and the Dow. And if you really step back and look at the 3-year performance record of some of those stocks, they're absolutely extraordinary. For example, Apple's up like 55%. Microsoft, 3 years, 100%.
So you really got to step back and make sure you look at the big picture. Before we let you go, just quickly, the Federal Reserve expected to raise interest rates once again later on this month. Do you think that's we're still on track for that? Great
question, because just last week, Bloomberg did a survey of economists, and 100% said they were going to raise rates.
Might not be that many now. Wavering a bit. Okay.
I think some people
Financial analyst James McBride, thanks for coming in.
Pleasure.
Appreciate it.